Yeah, we're just getting warmed up here this week, aren't we? Hope you guys had a great day out there. Welcome back. Another great day comes to an end. It's Wednesday evening. Time to get back to work. 11th day of May, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us fund the best trades, setting up for Thursday's trading session. I got a great video for you guys tonight. Lots of great trades setting up for Thursday's trading session. Got the oil, got the Nasdaq, and we got the S&P locked and loaded for tomorrow. Glad to see we got you right here with me tonight on this video. I'm going to cover all my favorite trades in tonight's video. That way you have a roadmap to make some money on Thursday's trading session. Before we jump in though and get this party going, got a lot we're going to cover here tonight. I want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish all the good stuff, all my best trade ideas right here on this video newsletter every evening during the week. So make sure you subscribe, hit that little bell icon so you don't miss tomorrow night's video. How about questions? Any questions for me? Drop those questions in the comment section. I do personally go back and answer all the questions, so don't be afraid to ask questions. And if you guys enjoy the video as much as I enjoy making it, if you tune in every evening, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, eh? Let's get ready for Thursday's trading session. I am a little bit late. Lost power here in the office a few minutes ago, so sorry for the late upload here tonight. Always keep me on my toes here on these nightly newsletters. But where are we for tomorrow? S&P, Nasdaq, crude oil. Well, I'll tell you, the S&P and the Nasdaq are both bearish right now, but the bears, they better show up for tomorrow because we're definitely bearish. We're definitely bearish, but there are ranges right above us, and we're sitting right at those lows here. So, obviously looking for shorts here at this point. We're very bearish overall on the Emini and the S&P. So I definitely have some pullback trades, right? Some short trades I'm watching for tomorrow. Got some big targets waiting down here at some next big levels here on a weekly chart. But I'll tell you though, the bigger money tomorrow may just be on those reversals going back up into that trading range. So we're definitely bearish, but I got some really nice reversal opportunities for us tomorrow. Some nice 10, 15x reversals I would love to see materialize here for tomorrow. We're going to cover all those trades here tonight on this video. Oil is pretty straightforward. Oil is a bull market right now into a trading range. Relatively easy right now. We got some key levels of support, looking to buy some pullbacks, looking to trade some breakouts. It looks like 110 might be on the radar for those buyers here later on this week. And of course, you know me, I'm going to talk about some reversals here as well. We definitely have some potential for some reversals here off the top of that trading range. We're going to cover all that stuff, all that good stuff here tonight on this video. Before we jump in though, before we jump into each individual chart here, let's make sure we all get on the same page here to find these web browsers here right now. I lost power midway the last video I was recording here. Anyways, tomorrow's Thursday. The big news for tomorrow is that PPI report at 8:30 Eastern time. Don't worry too much about that jobless claims. The jobless claims will take a back seat to that PPI report. Now, even though the PPI report is an inflation number, I doubt we're going to see as dramatic of a move that we saw with that big CPI, the consumer price index, because it's tied to consumers and consumers really run the economy. The CPI report does tend to be more of a reactionary event here. Tomorrow, though, the producer price index, another inflation number. We'll see if they back off record highs here tomorrow as well. I wouldn't expect to see as big of a volatile reaction, but hey, you never know, right? You never know. Our job right now is to be ready for some potential catalyst tomorrow at 8:30 and then trade the reaction. You'll also notice too, there's no Fed speakers tomorrow until we hear from Mary Daly late in the afternoon. So there won't be any of those grenades going off, at least that we know of. But right now we are keeping our eyes and ears open for any Fed speakers that come out and toss some grenades during the session here right now. So we definitely will have our live news feed going tomorrow in the trade room. And speaking of trade room, don't forget, if you're looking for a great place to learn and trade along, we run a daily trade room opening up every morning at the opening bell. I'll put all the information for that in the description of this YouTube video. Let's get back to our charts though here for tonight. S&P, Nasdaq, crude oil. I'll tell you, tomorrow could be a really, really busy day, right? Get a lot of volatility the last couple days here. Let's jump into each one of these charts. Now, guys, whether you trade one of these markets or all of these markets, I'm going to go 1, 2, 3 and cover all my favorite trades on each market tonight. And I'll tell you, even if you don't trade each of these markets, you'll learn something new throughout the entire video. And I like to use different trade variations, different setup ideas, different advanced tactics as I go deeper into this video. So I'll definitely give you a reason to stick around all the way to the end. I'll save the best stuff for the end of this video. So don't exit off too quickly here. Let's get into it though here. On the S&P first, we'll go S&P, we'll go Nasdaq, we'll go crude oil. What's the most important thing happening right now or affecting this S&P chart? I would imagine the most important thing, there are probably two really important factors here right now. One, of course, is that strong move down. This is a pretty strong move down, and anytime you see a strong move in one direction, we always expect what? We expect to get a relatively deep pullback and a retest of that low. So bears definitely have control, but what do we always say? Mission accomplished. Anytime we see a strong move in one direction, we very frequently see a retest of that level. Strong move in one direction, retest, mission accomplished. So again, even the bears have control, they've got to kind of give us some more, right? Because right now, they kind of did what they were supposed to do. At this point right now, the bears have to, like I said earlier, they have to kind of show up here tomorrow. They have to hold this price down below this range or start to pull this thing lower towards those next key support levels down there, or else we may see the price snap right back up into that range. This is the second component of this chart, and it's not just today's range. Today's range is just a small little snippet of what's happened over the past couple days here. If you go back and look back in time here, I laugh because it's such a dramatic range. You can see, right, there's that big range we talked about last night, having multiple ranges that would simply flush right back and forth here. One big trading range. So you have to think this 4,000 area, you got to think this area right here is a big juicy magnet for some buyers and potentially some profit taking here on any reversals as we go higher. So we're bearish, but we're sitting right at a major level of resistance, major level of support. What do the buyers want? What do the sellers want? The sellers have a pretty straightforward job. You know, there's a lower low here. Find that channel. You know, the bears would love to get short up around that battle zone. It might not be the easiest short to take there. We'll talk about how to have the game plan for that in a moment. The bears would also like to trade some breakouts as we go lower. We do have some key levels down here waiting for us as we go as well. So bears, of course, would like to take out that, 3877 low, 3900, big round number as we go. What do the buyers want right now? The buyers really have probably I don't want to say easier job, but there's probably more opportunities right now to be a buyer until we see more. Again, unless the bears continue this lower here, the buyers, for example, the buyers would love to see those bears fail and run right back up into that trading range. The buyers would also love to get maybe a double bottom reversal here. We see a lot of those with ranges above us. So we definitely have plenty of ways here to be both buyers and sellers here on the S&P. So how do we buy it? How do we sell it? Let's talk about the price goes higher here right now. If the price goes higher, if I want to sell this market, I have a lot of momentum on my side. The problem, though, is these lows are going to start acting like support. And so the big challenge we have in this situation is we really have to anticipate, at least in my eyes, we have to anticipate there are probably going to be a lot of buyers who are trying to run this thing back up into that trading range. So in order for me to want to sell this market, it's a relatively shallow pullback. And so shallow pullbacks require what? Traps. Traps are where the money is. On this type of situation where you're worried about the range magnet, you're worried about selling around these lows here, this is exactly where what I call a trap setup is going to be ideal for that short going lower. It's a really easy way to get a trap in those buyers. Let them try once, let them try twice, get that trap as we go. Trap would be great. take some profit off at that low, leave that runner down into our buy zone as we go lower. At this point, though, how do you buy it, right? How do you buy it? Boy, there are a lot of different ways we can buy this market right now. I think my favorite way to buy it will be a pop and grind. So let's say we pop up to the high of that channel. But now, instead of the buyers coming in once, twice, and dropping, now the market starts to kind of grind and grind. Now, that grind is a really big giveaway because that grind basically is a short squeeze. The markets grind like that whenever the opposite side of the market is walking away. So in this case, it'd be the sellers are walking away on this. If we get to start to grind higher and separate off that moving average, what we're going to do is draw a nice, tight trend line right off those highs, bring it right down to that major low, and grab that first test, right? That first test off the low of that channel. Now, these could be traps, these could be failures, these could be pullbacks. Now, I know most of you guys have already learned these setups, right? You know about traps and failures and pullback combinations. I know many of you guys and gals have taken our free trading course. You've learned the rules. You know what they look like, when to take them, when to skip them. But I'll tell you, if you're here for the first time tonight, or if you haven't taken that free trading course, if you haven't learned the entry setups I'm talking about here, you got to grab that free course. You're going to love the free course, learn all the setups. I'll put a little link up here for you in the upper right-hand corner. If you're like me and you hate missing the best trades each day, or you're taking too many losses or making too many mental mistakes, I'm going to go over my entire roadmap we use in our trade room in that free trading course. So grab a little link that popped up. Hundreds of examples of how we apply things like traps and failures to all of our favorite futures markets in our trade room. So grab that link that popped up there. That way, the next time I say pop and grind and we draw that channel, you'll know exactly how to draw the channel. You'll know where to grab those traps. You'll know where to find those failures, and how to grab that runner as we go. Where do you think that the market wants to go at that point? Well, an easy giveaway is always the first leg is the third leg. That's always kind of an easy rule of thumb. The first leg up is always the measuring leg in a trending market. Third leg up is usually symmetrical to that first leg. If I had to guess, though, I would guess 4,000. I would guess that 40-20 area. There's this trend line coming down overhead off those highs, right? If you look left here, there's a trend line here coming down overhead. That would be a great place for some profit as well. I got a couple more reversals I want to talk about here. I got a few more reversal patterns here we'll talk about. We'll cover more of those though on the Nasdaq as we go deeper into this video here. Now, first things first here. What if we go sideways down here? Okay, what if it goes sideways? So now we kind of know how to trade this thing as it's going higher here. What if we start going sideways on this? What's the best way for us to trade this if we start going sideways? This is very, very possible tomorrow. Again, the bears have control of this market. So if we start going sideways here and start to hold off of this area, now this area becomes a level of resistance. And now we can go up, wait for that pop up, wait for those buyers to come in and try to buy this thing. Remember, if we see a range down here, that range becomes the new magnet, right? That new magnet. The longer we sit and go sideways, the more this range gets moved down to this range. We can use those prior lows as levels of resistance at this point. We can now wait for that pop up. Let those buyers come in, let them try to buy that pullback, and once they buy that pullback, we can sell back down into that trading range. So keep an eye out if we start going sideways here, and again, this will also apply to the Nasdaq as well. Now, I'm making an educated guess right now. This range may come down here too. Just be aware of that. If we start going sideways in a range here, find levels of resistance overhead. And again, you're going to learn all about those failure setups inside that free trading course that I mentioned earlier. Now, what if we go lower here? What if the market continues going lower here? This is really what the bears want, right? The bears want to see this continue going lower. If we continue going lower, what you want to remember is now we've kind of broken free of this range now, and now ideally we want to try to use that range ideally as a key level of resistance. Here are a couple things I would keep on your radar if this market does go lower here. First of all, if it starts to kind of grind down, right? right? Grinding down. We just talked about this a moment ago. Draw that trend line down off those lows, bring it right up around those highs, and start looking left. Start thinking about where those prior swings are. That's usually where the best shorts are going to be. Get above those prior swings. That'll give you your trap set up. Rope in those buyers who are trying to buy off the moving average with a failure set up, and then grab that pullback combination as we pull back and go from there, right? Makes sense? Now, one adjustment on this, okay? One adjustment on this. If we don't get the bounce off that channel, let's say, for example, we really pop up, right? Really, again, we grind down and we begin to pop up here. Remember, this area can still be used as key resistance. What's the problem though now? The problem is that pop up will be pretty strong. And so whenever we see a real strong pullback, what do? We wait for the price to start pulling back to the moving average. We let the buyers come in and try twice, right? This is exactly where a small difference in the pullback size will determine whether it's a 2-try failure or simply a 1-try failure, right? Does that make sense? So again, if we pop up, if we grind down and then big pop up, which is very likely because nobody wants to sell way down here, right? They're going to want to sell high. And so we'll look for that short off the top of that channel with that failure pattern, or if it goes through the channel high, think about the buyers once, buyers twice, and then hitting those stops for that run back down from there. And remember, my favorite follow-up trades is to find a new channel by drawing off those lows and grabbing that first pullback off of that new channel, right? We talk a lot about that on this video. So 2-try failure and then grab that. I know it's kind of switched over there. Sorry about that. But grab that new channel, right? Draw the channel at those lows, hit that channel high. That could be a trap setup, a failure setup, a pullback setup. Again, you'll learn all the entry patterns inside that free class I mentioned linked up in the upper right-hand corner. Target, of course, is back to those lows, right? Leave a target back to those lows. That's the objective as we go here. So be aware of that if the market does start to run lower here. Perfect. Now we know how to sell it as it goes higher. We know how to buy it, or we know one way to buy it as it goes higher. We know how to trade as we go sideways. Again, find levels of resistance, up, failure, and back down, or that kind of breakdown, pop, failure, and back down again. I like that trade probably the most out of all of these on the short side here for tomorrow. Let's add some more to this. We got some more to talk about here tonight. These are just the basics here on the S&P. Let's get this party going. Let's kick this up a couple notches here as we go over to the Nasdaq futures. Over on the Nasdaq is, as you can see, very similar here to the S&P 500. We have a very strong move down, and anytime you see a strong move in one direction, you expect to see a retest of that low. And now here we are. We're basically sitting right there, right on top of that big, juicy, round number of 12,000 even. At this point, the bears have to put up or risk running this thing all the way back up into that trading range. Because right now, the bears have kind of done what they should. They strong move down, they've retested. Now where do we go? Right? Do we go back up and sell out that high? Do we go back up into a reversal, which would be great, that'd be great for tomorrow? Or do we continue going lower and we focus on that short back down again? Let's talk about some variations of this one, okay? Because we talked about the basic stuff on the S&P chart, right? That's kind of the basic stuff there. So again, as we pull back, right? This is exactly where a 1, a 2, right? A trap setup is really going to be beneficial here because again, this whole area here is a major area of support. So if we slide back above this area, you got to think there's going to be a lot of buyers who want to pull the cord on that and run right back up into that middle area, right? That 362.5 area, which is the middle of that triangle we mentioned in last night's video. So as we pull back here right now, I definitely do want those buyers trying twice. I would love to see some sort of trap set up. And remember, as we go lower here, right? If the market begins going down, right, I can now mark up that low, mark up that high. I can grab that first test off the high of that channel, right? Makes sense? Make sure you grab that entry off that channel before we retest the low, right? The objective is to retest the low. So as we go higher, we're selling into that 2-try failure with that trap because of that prior swing or the prior low of that range, and then dropping it in for that new channel before we go back and retest those lows. Also, if we do pop up and we start to grind, again, find that hidden channel, mark it off that high, find those trap levels below prior swings, rope in those bears, trying to sell short and punch it right back where it goes up, right? First leg, third leg. Again, pretty easy on this one. 362 half there. Pretty easy objective. If they really get what they want, we'll go all the way back up the other side of that trading range. How about a 1-2-3 breakout or 1-2-3 reversal? Absolutely, that will work too, right? What if we pop up now that we pull back to the moving average? And instead, again, the buyers try once, we go back down again, but now the buyers hold and they jump off that moving average, right? It's not a pop and grind, it's a jump, it's a pullback, and they jump off that moving average. We call these are what we call 1-2-3 moves. 1-2-3 moves, they change momentum now to the buyers, right? The buyers now take control. Once those buyers jump off that moving average, it's almost like the buyers ripping the control out of the hands of the sellers, and now we know where the market wants to go. Now we go up. We don't chase it. We draw a trend line off those highs. We bring that trend line down to that low. I always look for those prior swings, grab those traps, grab those failures, and pump it up from there. Again, third leg, first leg, right? First leg, third leg as we go. That'll give you a really easy way to time the exit there like a Swiss watch, right? Really nice way it goes first leg and third leg there. That is one there. I've got one more breakout higher. I have one more kind of reversal, one more breakout pattern. I'm going to cover that on the oil because I think the oil is more likely to get that one for tomorrow. But again, all these reversal patterns, all of them will work here for us on all three of these markets. All right, so just be aware of that. Let's see here. We talked about if we go lower. Right? Or sorry, if we go sideways here. If we go it's fine by me, right? If we go sideways here, remember, what do you do? What do you do in a sideways range like this? It's bearish. The longer we sit and go sideways, the more that new range becomes a magnet. What do? You find levels of resistance up above. You wait for the pullback. We wait for those buyers to come in and try to buy the pullback. I don't try to sell into that pop. Because a lot of times what will happen is you'll take that trade short, you put your stop above that high, you know what happens? It comes back, stops you out, and then collapses back down. Okay? There's nothing worse than those stop and runs. You know what I'm saying? When it stops you out and then runs right in your target. That's why I'm not a very big fan of trying to pick that top. What I'd rather do is wait for those buyers to come in, have them try to buy into it. Now we know where their pain is, right? Now we know where their stops are. We're at a level of resistance. Buyers are buying into it. Once we see that nice juicy signal candle, and you'll learn more about this in the video class I mentioned earlier, now we can sell right into those stops. If you're long and you're caught on the wrong side of this market, you're going to sell your way out and the price will collapse right back down into that trading range. That's an easy setup if we start going sideways here. If we go lower, right? If we go lower, remember, watch that grinder, right? Watch if it grinds down here. We'll find a new channel. Let me get rid of this bigger channel here for us right now. If we do end up starting to grind down here, same basic idea. Draw that trend line nice and tight. Pin up around those major highs, watch those pops up with those traps, get those buyers trying to buy it back up again, get them caught on the wrong side, trap, failure, pullback combo, right? Where's our target here? Well, target 1, back to retest that low, get another big level of support here at 11,764 and a quarter, makes for a good one there. I also think too that if we do get, let's say for example, the market really runs lower here. In this situation, you want to think about those major areas of support down here. Profit taking will happen down here, get that pop up, trap in, and then go back from there, right? So think about kind of how that might work, right? If we were to go and really make a strong run down, right? So no way to sell on the way down to it. Strong run down. Now we start doing is, and we start drawing out new bigger channels, right? New bigger channels, right? Find some bigger swings off the bigger highs, wait for now that pullback, and this will almost always get you above that moving average. Remember, anytime we have a strong move in one direction, even if it's right into support levels like this, we expect to see a retest of that low. So once those buyers come in and try to buy that reversal, because again, those pops are very convincing, right? They're very convinced those pops off the low. But the problem is, though, it's a bear market. Remember, the buyers have to hold and jump, right? It doesn't matter how strong the pullback is. We see a lot of real strong pullbacks in a bear market. The buyers have to hold that pullback and jump. Then it is a bull market. Then we can be buying pullbacks from there. At this point, though, it's a complete gamble. I'd rather wait for those buyers to try to get long and then use that momentum to my advantage, use their stop losses to my advantage, and sell that failure with that objective going back down to that low. Now, I would also think, too, it's very reasonable to think we may see a strong move down, a pop up off that low, get those failures to go back down to retest that low, and then what do we always say? Mission accomplished, right? Once we get that strong move, we look for that bounce up, sell into that retest, then mission accomplished. Sellers have now, they did what they should. They completed their objective. Now is when you can definitely look for the long side here from there. And how do you do it? You grab one of those 2-try failures. Let them try once, let them try twice, rope in all those bears running right into that low. All their stops now are sitting right above that high, and just punch it right into those stop losses. Now, when you get that 2-try failure, remember, your job is not over yet, because a lot of times these things really rip and go higher here. So while you're watching the profit pile up, make sure you grab a new channel off that high, find that new channel off that low, drill down to your faster time frame to find the traps. Get that moving average coming over, get that trap, get those bears trying. Remember, at this point now, the sellers already got their objective. Okay, right now, the buyers get that pop up. They're going to want to retest that high, and we can hit them where that new channel comes in off the low of that new channel. I love these type of reversal patterns where you can make money selling the pullback on the way down. Once you get back to that low and we see them taking profit down there, bears start trying once, trying twice. You can now buy into those stops, and then as the market pops back up, we find that new channel, grab that first test, and see how far it goes from there. I really like that double bottom reversal pattern here, or sequence, if you will. It's more than just a pattern, obviously, right? Couple different ways we can trade this. Again, this will also apply to the S&P as well. So at this point in the Nasdaq, we're looking pretty good. We've talked about how to trade this thing as it goes higher, a couple of ways to buy it, a couple of ways to sell it if it goes sideways, and some good ideas here if it goes lower here as well. Let's keep going here. How about some oil? Wrapping things up here tonight on the crude oil futures. Got to make this video short before my power kicks back off again. I literally got about halfway through the last video and the power kicked off here at the home office. Anyways, that's all right. Nobody ever said it was going to be easy, did they? What's going on with oil here right now? What's the most important factor here on the oil? Oil is pretty straightforward, as you can see. It's pretty much a bull market into a trading range. Bullish market into a range. Pretty simple idea. Find levels of support below the range. I really like this hidden channel coming off those, right? See that pop and grind? Pops up, grinds up, right? Find that channel, mark up off of that low. Hopefully that makes sense. That's a great spot for support. This little range is a great spot for support because, we do oftentimes see a bull move range, new range. They'll pull right back, grab that bounce off that previous range. Great spot to be a buyer here on the pullback. Buyers would also like to buy a breakout going higher. I mentioned earlier, it kind of smells like this market wants to make a run back to that last week's closing price. Remember, towards the end of the week, Thursday, Friday, you better keep those last week closing prices on your radar because they love to act like magnets. Now, the S&P and the Nasdaq, they need a bit of a Hail Mary to get back to last week's close, but oil is certainly within striking distance right now because we've seen a lot of this. We go from 100 to 105. We're making these $5 moves here pretty easily here on oil right now. It makes perfect sense here if these buyers keep this party going. 110 looks very reasonable as we go higher here. How about the bears? What do the bears want to do right now? The buyers have a pretty straightforward idea. How about the bears right now? The bears have to be careful because they really can't sell a double top right now because this range, we really should be rotating lower. So you really have to, in order for me to want to be a seller right now, we have to pretty much go lower, retest that high, and then we start to look for that reversal off of that high, which may not be that easy because again, we've got what feels to be a pretty bull market right now. Or we have to get down into these support levels and we basically have to muscle out the buyers, right? They have to hold this and break this thing down. So not that easy right now to be a seller, but hey, we saw this market turn from bearish to bullish yesterday, so this could easily turn bearish here. We just have to wait and see we get here at the opening bell here. So what's the game plan? How do we buy it? How do we sell it? What you want to think about right now on oil is we'd love to see a pullback, right? We'd love to see a pullback. The question is how deep is that pullback? I could easily see us just pulling right back to, that 130.88, that 103.88 area, excuse me. But here's the problem though. It's a relatively shallow pullback at that point. What do we use for entries on a shallow pullback? Traps. Right? So we take out that low, kind of a minimum pullback, right? Let those bears try once, let them try twice, get that trap. So shallow pullback, give me a trap, right? Where's my target? Yeah, back up to retest that high. Does that make sense? Shallow pullbacks, I want to buy as low as I possibly can. And so traps are great. But if I see a relatively deep pullback, like back here, for example, very common. We see a strong run up. We pull back underneath the moving average. The bears come in, try to get short, and their stops make for gasoline. Okay, maybe a pun intended on that one, right? But the stops become fuel, right? Maybe some crude oil fuel, right? Getting up to retest those highs. Same thing over here, right? Same over here. We see a relatively deep pullback. Get those bears to come in. Hopefully they will. Hopefully they'll confuse this for a reversal. Remember though, it doesn't matter how deep the pullback is. It doesn't matter how strong that first leg is. When does it become a bear market? It becomes a bear market once those bears jump off that moving average or if it begins to grind down, right? That usually means the buyers have walked away for whatever reason, right? Like back here, right? See right there, right? See back here how it pops up, right? Pops up, starts to grind and grind and grind. That's your giveaway. That's your giveaway right there. Mark up that off those highs, off that low, buy that first pullback and conveniently traps, baby. Right? This is exactly what I'm talking about with those pop and grinds. Draw that channel nice and tight, find those traps, and then rope in those bears right below that moving average. Now, one more thing to remember is if we pull back, right? Pull back, rope in those bears, get those bears trying. Where are their stops? Hit right in those stops, and then if you can get it fast enough, that first pullback is always great, but just be aware though, you want that pullback, again, failure pattern into pullback. You want that pullback set up though, before we get back into that range though. All right. That's kind of the one criteria about that combination. The failure is pretty easy. Make sure you grab that first pullback though before we get back up into that trading range. That way there's no head fakes along the way. Again, objective would be back up to retest the high. Now, let's say they really shoot lower. Let's say it's a real strong move lower. Then what do? Can we still buy it? Oh yeah, we definitely can. But now we have to use that 2-try failure. So 1, 2, rope in those bears. Because remember why? Because anytime we see a strong move in one direction, we expect a retest of that low. Okay, the bears are going to probably try at least twice. Once they do that, again, you know where their pain is. You know where their exits are now. And now you can wait for that pop right back up. Now, usually what happens on these is, these will usually end up being a 2-try failure. And then the deep pullbacks love to come up and give you a trap entry as well. So think of this variation. Again, let's kind of keep the best variations all the way to the end of this video here. But again, strong pullback, right? Strong pullback. Let them try twice. Hit them right where their stops are, right? Buy right into those stops. When you're stuck short, only way out is to buy your way out. Then as it snaps higher, because it's got so many bears caught on the wrong side, it snaps pretty quickly here. When it snaps like that, don't chase it, grab that trap. The trap setup is where the money is on the way back. If it snaps on the way back up into that trading range, right? That makes sense here. Hopefully you're liking this stuff so far. Hopefully by now you subscribe to the channel, hit that like button for me. And also too, if you're watching right now, in the comments section, what's the most important thing I can help you with in these videos? Is it entries, trade management, finding levels of support and resistance? Is it mindset? You know, if you're still watching this video right now, I make these videos for you. You're the dedicated trader I work for, right? I work hard for. So let me know in the comment section, if you would, what's the biggest thing standing in your way right now? Is it finding the right levels, entry timing, trade management? Is it mindset? Is it all the above? Let me know in the comment section. I do go back and again read those comments every day, and I'd love to hear from you in the comment section there. Now, as we pull back here, at what point does it turn bearish? You know this. It has to hold that pullback and jump. And if it holds that pullback and jump, what do? We mark off that low. We mark off that high. I'm obviously simplifying this right now. We sell the first test of that high. A lot of times what happens is as the market begins racing lower, we can find some really easy trap areas up around the high of that channel. And so those are always kind of where I look for the entries, right? Up around the high of that channel, trap, failure, pullback. Again, I'm simplifying this right now, just kind of keep the video short. You'll learn more about these specific entry patterns in that free trading course. And again, first leg, third leg is an easy way to kind of, fine tune that exit. I would imagine though, 100's an easy target, obviously back down to retest the low. Or does it pop and grind? Right? Pop and grind. Easy one. Mark that low, mark that high. You guessed it, right? Got that trap and keep it going. First leg, third leg. You guys heard me say it a couple times already. I would stay away from the middle here. Stay away from this range. Nothing good happens inside of a trading range. As we try to go higher here, right? As we try to go higher here. Oh, one more thing too. What if we pull back, we go back up to retest the high? Now what do? This is exactly where we grab those two tri-reversals. Buyers once, buyers twice, hit those stops, find that new channel. You got it. You got it. We talked about this a lot here this week on this channel. Make sense? Again, buyers buy the dip. They take their profit at the high. What do we say? Mission accomplished. The buyers now are out. The professional buyers are out. These buyers right here are the rookies, right? These are the suckers at the poker table, right? These are the guys and gals buying oceanfront property in Las Vegas. You know what I'm saying, right? I'm kidding, obviously. These are inexperienced traders, small accounts. And so once we start seeing those traders start to buy into those highs, no offense to all those beachfront property salespeople in Vegas right now. That was a bad joke. I apologize about that, right? Again, hitting those stops, and then grabbing that reversal off that channel. Where's my target on that? Back to retest that big low. It's an easy target, right? You open those buyers the high, you take the profit off back around that big low. It's a pretty easy target. A lot of times these become one big trading range, like we saw on the S&P and the Nasdaq over the past 48, 72 hours. All right, ding, ding, ding. Hopefully light bulbs are going off on that. That's a great double top reversal and an easy way to find a target. Going higher is the easy part, right? Look at all that blue sky overhead. This is the easy part, right? Going higher is the easy part. Look at this area up here, just begging, right? 110 right now is saying, I'm lonely. I'm lonely. Come hang out with me. Literally, right? Big range up there, big magnet up there. I would have a range up there, but again, I lost power. Last video, I lost half of this crap on my chart. What a mess. Anyways, there's a range up there. You can tell, right? A lot of overlapping candlesticks, a lot of volume trading hands right there, 110, and just conveniently enough, that's last week's closing price. Any violence news out of Ukraine right now, any supply chain news, you know that's going to probably have an impact on that move higher. What would be a breakout pattern going higher here right now? Well, we talked about quite a few of them already. We've talked about a 1, 2, 3 breakout, find that new channel. Okay, that's a pretty easy one, right? Yeah, buy that first test. That's an easy one. We've talked about that pop and grind channel. Yeah, that's a pretty easy one, right? Grab those traps and go from there. That's a pretty easy one. How about a 2-try trap or a 2-try breakout? You got to love these setups. These are great, especially when there's a lot of open space overhead. Now, if you're a Nasdaq trader or an S&P trader, this type of pattern to look for if it spikes back up in that trading range, right? So S&P and Nasdaq are in a range right now. We're down around those lows. If we spike back up into that trading range, this is the same pattern you want to use here for that. Strong move up, right? Strong move up, shallow pullback, higher high in price, traps, baby. This is, I don't think YouTube allows me to say guaranteed, but this is almost guaranteed winner. This is a very, very, very high percentage trade here. Again, it's a strong pop up, right? How strong? You'll know it. It'll separate off that moving average, right? It'll really separate. It'll pop. It'll make you lean forward in your chair. That's the way I teach it, right? When you go, whoa, okay, that's the strong pop right there, all right? And if you don't know yet, if you're not at that stage yet in your career where you know what a strong pop feels like, that's all right. Give it some time. Get in the trade room with me, right? Come out and join us in the trade room, and I'll make sure you know exactly what strong pops look like, what is not strong enough, kind of keep yourself out of trouble and put you on some of the good entries here. So strong move up, shallow pullback, higher high in price. Okay, this is a FOMO trade. This is a FOMO, a fear of missing out trade. The strong move up gets that momentum going. The shallow pullback drives all the Fibonacci traders, everybody crazy, right? They can't get into it. The higher high confirms it's not a V-top. Because they do that, right? They do. Sometimes they'll pop up in V-top. Strong move up, shallow pullback, higher high, traps, baby. Again, grab this pattern on the way back up into that range on the S&P and the Nasdaq, right? Grab this pattern on the way up to that 110, that last week's close at 110.43. All right, guys? And again, come out and join me in the trade room every morning, and we'll do it together. Like I mentioned earlier, my job tonight is to plan my trades, and tomorrow we're going to trade our plan. And that's exactly what we're looking forward to doing tomorrow morning at the opening bell. Guys, if you're looking for a great place to learn and trade along, if you're like me and you hate missing all the good trades each day, or you're taking too many losses and blowing your accounts, what are you waiting for? Get with us in the trade room. Join as a member. I'll put all the membership links, all the free course links. Definitely take that free trading class, learn the strategy basics, learn the setups basics. That way you can start seeing it work on your computer, and you'll be ready to go with us soon in the trade room as a brand new advanced member. Again, drop those questions if you got them in the comment section below. Call the office. I'm always here to help. If you guys have any questions along the way, don't be a stranger. Definitely keep in touch via telephone, email, or Skype. But that's it for me tonight, guys. I got to run for now. I'm a little bit late. Better get this video uploaded here. Hopefully the power stays on here for me to finish up this upload for you guys tonight. But have a great rest of your evening. Thank you so much for tuning in and sticking around tonight. Have a great evening. Get some rest. And we'll see you guys tomorrow bright and early in the trade room. My name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.